All right. Hello, everyone. Welcome to day number 2 of Malaysia Blockchain Week. So we're going to get started immediately. Malaysia Blockchain Week is part of an entire Malaysia Blockchain Month organized by Access Malaysia's and as well as its media partners, including Bitcoin Malaysia, Blocklime, Blockchain, ETH a couple of Taiwanese media, Grenade, at at uh, at Media, DeFi Singapore, and the marketing NFTs specialist, Imperium Universe. So, what is Malaysia Blockchain Month? Malaysia Blockchain Month, is an event that is taking place starting yesterday for an entire of 6 weeks. Every single day, same time at 5 p.m. to 6 p.m. We're bringing you education content. Every single week will be a different theme. This week we are focusing on Malaysia. What is the adoption, like in Malaysia? How do we get to where we are today? Where are we going? How do we get there? Week number 2, we're going to be talking about DeFi. Week number 3, NFTs. Week number 4, we're going to touch into enterprise blockchains. Week number 5, developer. There'll be a lot of developer bootcamps. And week number 6, we're going to end the entire Malaysia Blockchain Month with a 2-day conference called Ignite. And why are we doing this event? We're doing this event for 3 reasons. Number 1, to DFOMO, to DFUD, and the way that we do that is by educating people and giving people the easy platform to experience, to learn and experience and understand how to get started. So also, we did this before last year, with relatively very good success. That so much so that people also, when they wanted to know what is DeFi, they would rewatch those videos from last year events. And to date, I think almost more than 10,000 people have benefited from it in Southeast Asia. So it kind of also puts us on the map, and it helps grow the industry in this area. An industry that is growing really, really fast. How fast? Just look at the numbers. Last year, when you take all these digital assets that live on the internet on decentralized networks called blockchains, take all these digital assets, they were worth 250 billion. Fast forward to 2021, we hit 1 trillion in January this year. It took 12 years to hit this very much once upon a time, just a dream milestone. And then 8 months later, now today we are on the 24th of August, and it took 12 years to get to 1 trillion. It took 8 months only to get to 2.2 trillion. This is how much attention is coming to this space. The question is, are we able to help, to capture? How much are we able to do that as a nation, as a region, to be part of this new economy? So, with all these digital assets coming into existence, but how do you do that in Malaysia? In Malaysia, it's a little bit different. There was some regulatory clarity that was made last year in October 2020. What is this? Announcement from the Securities Commission that is anyone who wants to issue digital tokens, who is based in Malaysia and wants to issue new digital tokens, needs to do it through a process that is approved by the Securities Commission. And the guidelines came out, and that is to be done through the IEO operators. So there are a lot of companies that have applied to be an IEO operator. The IEO operator is the one that vets the projects before facilitating the issuance of the digital assets in Malaysia. And this is something that was picked up from the latest Edge magazine, that the IEO race is heating up. Of the many applicants applying today, we have 2 special guests. One is Rodney Koh from Fennel Capital, who's one of the IEO applicants, and another one, George Wong, who is also representing Wetokenize, another IEO applicant, to better understand this development here, in our country. So I'd like to welcome George. Rodney, how are you doing?
Hey guys, feeling great
Hey,
today.
good afternoon, everybody. Good afternoon.
So let's get started, with a very easy question. We already have crowdfunding, okay, platforms, peer-to-peer financing. Why issue digital tokens? Why IEO? What are the benefits? Can I open the floor, okay, to any of you who wants to take this up first?
Maybe I'll jump in first.
Go ahead, George, please.
Yeah. Okay. So I have a direct view of this because part of my group, as you can see here in Ecosys as well, which is another company I'm in, where I'm the CMO. We do help companies go through fundraising by educating them on how to do it. We have just gone through our pre-IPO fundraising as well. So we have done the very traditional side. We have done ECFs many times personally through our subsidiaries, because we have 10 companies and in various stages of their business life. So we do see, and why I'm involved is because we do see a value to tokenization, especially if you're in the ECF market. Because in ECF, predominantly, most companies, even the ones that we assist, are at the startup stage, right? Or they're at the early stage. So if you're an investor, one of the things they don't talk about, now the concept of ECF is about helping the little guy, right? The retail investor to get the opportunities into some of these investments that is normally reserved for angel investors or institutions in a safe way, right? The ECF is there to help you to ensure that these companies are safe, they're compliant, they're not scams and so forth, which is great. But the issue is exit. The problem is, as the small guy in an early stage, you have a very long wait until you can exit your investment. Because what's the typical exit in this case is like an IPO. Now, the problem with, and IPOs can be anything in 2 years, if it's a hyper growth company, or 20 years, if it's maybe in a very traditional space. So it's very difficult for investors to exit, especially if you're the little guy. Like if it's a VC or an angel investor, they have the connections. They can sell it on to the next bigger player who wants to ride that trend, because a lot of people don't understand is that there are different investors at different stages of a company, right? But if you are the little guy in the beginning and you have no such connections, you are fully reliant on the company or the platform to help you to sell on to the next guy, or you might end up holding an investment for the next 10 years. Now, with tokenization and IEO, you can bridge that by providing liquidity to these investors at the interim before the IPO. That's one of the primary values that I hope that people understand, so that we give a solution to the retail investors to exit from their investments a little bit earlier. To me, that's one of the primary benefits. Yeah.
Okay, that's a very interesting one. So I've never thought of it before. Okay, maybe it's because too spoiled, okay, in the decentralized space. But what you say is very interesting, okay, that traditionally for investors, when they buy into an equity thing, the exit, okay, where can they exit? When can they sell, okay, their thing? They don't really have a lot of options. Whereas in the tokenized, okay, thing, in a tokenized environment, okay, when this happens, okay, in the next 18 to 24 months, that the IEO operators, okay, have been approved, and there are new digital assets, okay, being issued in the country. This can be traded, okay, via the local DEXs. Am I correct?
Yeah, well, that's the hope. I think that helps to solve a lot of investor problems. You can just ask any serial private equity investor. They've been holding on to certain investments for years, even decades, with no end in sight, right?
Why do you
And
say
that
it's a
is
hope?
some,
Why
right?
do you say it's a hope?
Because if you hold for an investment for too long, you start losing hope. You get what I'm trying to say? Right? So I mean, I deal with high net worth in the last 5 years doing this. I've been in various stages, right? And a lot of them just treat it as bad debt. Like, I took a punt and I have no end in sight. They just keep it as a long-term investor. They forget they have certain investments. Have you heard of that? These are all systematic problems because we haven't filled in the gap.
Okay.
Right. So to me, that's my big belief. I mean, Rodney maybe has a different alternative view on our perspective as well, but that's from me.
No, actually, I actually agree with everything that you said. But in addition to what you've highlighted, and I think it's very, very useful, is that we're basically, with the IEO platforms available and tokenization of projects being available, you're also offering another different form of investment, different model of investments to all peoples, ranging from the small investor to institutional investors, to be able to get into VC stage investments. We're talking about companies that either are established companies that have new projects, okay, which is what the rules are actually trying to get that to, and or new companies themselves with a whole new product roadmap right in front of them. So by tokenizing it and making it available to the investment public via tokens, you are giving opportunity for people, even retail investors all the way up, to be able to get in at an early stage in such an investment. Generally, VCs get, of course, very, very good rates of investments, many times the initial investments. These are only open to select individuals who are invested into VCs or into large funds, all right? But now you are opening that to a wider audience, okay? And in a very efficient manner on a very efficient platform. So the IEO market itself, the digital asset market in Malaysia, right, holds a lot of promise in many regards, and this is just one of them. Okay?
Right. Okay, so you've covered right now the benefits of issuing digital tokens, okay, from the investor's point of view, right? Because one, okay, is that the exit is easier, okay? There's a more liquid market, okay, for your investment, right? But what about for the issuers? From the issuer's point of view, what are the benefits, okay, of issuing tokens?
I think issuers coming to the market, actually looking for fresh capital itself, they're not constrained by needing to have a track record. Let's say, for example, if you wanted to do an IPO on the traditional market, you've got to have some form of history and track record. You could take a new idea, go off to the market, and if your new idea is sound and it certainly makes good sense, all right, you can actually raise money and actually invite people to join you on that journey of bringing that idea to fruition itself. So it's open to anybody, even startup companies itself. All right, okay. The other thing, of course, is that it allows you to raise up to 20 times your capital, which is, I think, a extremely good, very good multiple. You are allowed to raise up to 20 times your existing share capital there. So it is quite flexible and allows, we're under the general right now rules, you can raise anything from about 10 million ringgit up to the maximum of 100 million ringgit under the present guidelines. Okay, so giving in effect a sweet spot of anything between 40 to 50 million as being very rather doable, okay, in this market. So it's for new companies with new ideas, or even established companies that are prepared to set up a wholly owned subsidiary to try new things, new ideas. So it encourages, in effect, it's a marketplace for innovation and new products in development in Malaysia. So we think that this is a good impetus, especially at this time.
Yeah, I also wanted to add, right, that I think it's to add on, because I think what he said was, what Rodney said was correct. But I think also from my side, as a person who's been in capital raising and supporting companies, so to the issuer, one of the benefits not talked about a lot is that actually good issuers want to give their investors an exit strategy. It ties back to the same thing. Right? Because it's less headache. It's a headache, right? And it's easier for capital raising if we can tangibly tell an investor that, hey, there is a way for you to exit. First, it makes it easier for them to convince them. They're not thinking, oh, what if I hold for the next 10 years? Real problem, right? And then we said, no, because now we have a solution. It's in the pipeline in order for you to get an exit at a much earlier date. You don't have to make empty promises, because in the market, investors have heard IPO as an exit 1,000,001 times. It is nothing new, right? The ICO craze did the same thing. People, we're going to ICO, that's why you're going to exit. It's the same thing. And people are tired. People have been burnt. People have lost money from both ICOs and, of course, IPOs, are promises that can't be delivered. So if there's an earlier exit that is more tangible, like in this case with an IEO operator, you can tangibly plan for it upfront, right? And they know that with a certain level of comfort that they have an opportunity to exit. They don't have to if they buy into the project, but it's great to have that option. And issuers are looking for that. You know, they also don't want to give empty promises. Oh, just believe in me for the next 10 years. It's a hard sell. And I know it's a hard sell. I've just finished our IPO fundraise myself. I can never say stuff like that, right?
Okay.
It's not going to work. You know, that's
Okay.
key.
Okay.
That's really key. Yeah.
Okay, then I think it's timely. Can we address one white elephant in the room? Okay. Can you help the audience understand the main differences between a project that issues tokens in an unregulated space, like for example the recently hyped Remao swap, okay, which marketed itself as for Malaysians and etc. Right, versus a future project that issues tokens through the locally approved IEO operators? What is the difference?
Okay. What's the difference? Okay, let me start with how you would take a project to through an IEO. Any issuer wanting to raise a certain amount of money, okay, we think between 25 to say 50 million, say, needing to raise that money, okay, needs to bring that project to an IEO platform operator. Okay, an IEO platform operator then has to do an evaluation of that project itself. What they will be looking for is actually to determine whether the project itself is viable, and it is viable given its particular market niche or particular technological platform that it intends to use. All right. So there is in fact a due diligence process that's gone through and works through that. B, they will also look at the people behind this project itself, whether they are able to do what they say they're going to do. They have the team. They actually do a wholesale evaluation of the viability of the people, the project, and the promise. Okay, three things: people, project, and what they promise to deliver itself. The big difference between an IEO and an ICO, okay, of course, comes with how the funds are handled. In an ICO in itself, tokens are issued, okay? Those tokens are issued by the company, and sometimes those tokens have no connection, all right, with the assets or the projects or the company itself. The tokens are oftentimes issued by a foundation incorporated in another jurisdiction elsewhere, and those tokens are then issued, and then they have a particular value because they tie into the by association with the name of the company. Whereas in this case itself, under the guidelines itself, the tokens are issued, the monies are collected, okay, out of token issue by the IEO platform operator. The operator ensures that the monies go towards the promised project by only releasing the stated amounts, okay, as the project progresses. So if I were to come to an IEO platform operator as an issuer, I need to provide them with a product projection and a roadmap. I say, this is how much I will need to use to develop this particular product. And they will need to demonstrate that they have reached and arrived at those milestones before they get additional funds. And the funds are broken up in tranches. Okay? So that way, it is a means of being able to protect investors, okay, from any scams that may happen or projects that may fail for some reason as they are going partway through. Then only half the money is gone. As opposed to if you take all the money, you give it off to the issuer, and the issuer may or may not, finish the particular project. Here, there's a safeguard.
How I would summarize this basically is what you're saying is that the biggest difference between a project, okay, that issues tokens, okay, without going through this process versus going through the local IEO, the local IEO operators is basically a vetting process. It's just the due diligence, right?
Yeah.
Would you like to add anything, George?
Yeah, I do, because Rodney covered a lot of ground, but I do want to say one of the things that being in the space for a long time, probably longer than many people, is that a lot of people look at regulations negatively. We forget that regulations are there to protect investors. That's number one. So coming back to that comparison between Remao swap, right? Personally, I looked at it briefly, and within 5 minutes, it failed my due diligence, my personal. So I don't know them. They may be a good project, but if I was the advisor, they're presented in such a poor way that if I was a regulator, I would find a lot of problems with their project. And one of the key issues with a decentralized or unregulated environment is the anonymity. Now, it's a debate, right? People want to be decentralized, they want to be anonymous. But here's the thing, if you're going to park your money as an investor with a company, you want visibility on their founders. And the one reason why I would never put money into Remount Swap is I have no idea who's behind it. If your money disappears, who are you going to blame? And the problem with this market is most investors will not blame themselves on their poor due diligence. They will blame the Securities Commission for not regulating these guys, which is insane because they are trying to work in an unregulated environment, which, by the way, promoting Malaysia, everything from Malaysia, when it's a regulated activity, is already in trouble. So would you put your money into a project which has a very high chance of getting in trouble with the regulators? I would say that is the thing that why an IEO operator is necessary, because they do the due diligence checks for you, because you may not have the knowledge. I have dealt with many investors. A lot of investors, sorry to say this, think they know more than what they actually know, right? It's that whole I know what's best, I know how to analyze. But in the blockchain space, even I am not fully confident that I have covered all the details, because there's a lot of technology involved. A lot of the TAF involved is technological based. You may not have the skill set to even study a smart contract. I certainly don't. So the vulnerabilities will be looked at by the IEO operator, which you may not have the expertise to look at. So to me, I hope that people understand that regulating something doesn't mean that it's bad. The primary purpose is about protecting investors. I think the question is more about finding that balance. Do I prefer a regulated exchange over an unregulated exchange? For sure, because I'm assured that if anything goes wrong, the regulators will go after those guys to protect our interests. But in an unregulated space, if you can stomach it, you have no representation and you have nobody to complain to, because it is entirely on your own fault. And would you go into an unregulated project where you have no overview of who is the founder? I think that's a big thing, like the recent Binance ban, right? And they are trying to sue Binance, right? Certain countries, and they couldn't figure out where because it's totally decentralized, but they have an anchor in Hong Kong as the only avenue to sue because they have no office, right? That kind of thing. I'm not saying Binance is good or bad. It's the largest exchange. I think it probably does well. KYC has issues. But again, when people do want to take action, they struggle when you are in an unregulated space. So we like to see it like, we want the freedom, but we forget that when people want to help you get your money back, without regulations, there is no avenue, no discourse. Your money is gone, and that's it. And you only got to bear that. So that's the difference I think we should look at, right?
I can relate basically in the we run this community, Bitcoin Malaysia and whatnot, and one of the rules in the community is that we say that we always say not financial advice. Is your funds, your own funds, your own risks, your own rewards. You took the risk, you took the gain the rewards, right? So yeah, it's very different, in the crypto space, which is like self-sovereign. That's why you get to degen, right? But you're entirely on your own. You get what I mean? Right. So I suppose that in an unregulated environment, it means that people cannot degen. So in a regulated environment, there won't be degen, there won't be meme coins, like in 2017, we went through the ICO craze. Now fast forward, in 2021, I think there are surveys that have documented that more than 90% of those tokens issued in 2017 did not survive past 3 years. So what can we learn from 2017 in your opinion, Rodney?
I think the ICO craze, which we all went through not too long ago, is quite recent memory, has showed us that what is very critical in a functioning capital market of any sort is to actually have quality issues, okay? Issues which are actually substantial, they are real, they're not just fluff in itself, okay? Secondly, real businesses with real ideas behind them, actually, which will actually stand a chance for growth, all right? And stand a chance to be successful in itself. What happened during the ICO craze was it was a craze. Everybody, any man and his dog, would try to come up with a plan, a white paper. Some of the white papers I think we read at that time, not only was it poorly written, had no ideas behind them, but everybody put up a white paper and tried to issue tokens in the hope of making a quick buck, let's be honest with you. And even during that time, more than 90% of ICOs all failed. They never even made their soft caps, okay? All right, that was the nature of the market. But what the ICO craze did was prove that the technology behind it, blockchain, all right, okay, held a lot of promise. If the blockchain technology can be harnessed and put into a well-regulated and properly administered environment itself, it holds the very good potential, the great potential of being a functional capital market. Because as Michael Ventner always says, the blockchain is like a truth machine, all right? We can issue a token on a blockchain and it can represent anything you want to actually attach to it. It's entirely up to you. Equity, it can represent a share of a company, it can represent membership of a club, organization, what have you. Well, you can put anything to that token. And that token exists, it's transmitted, it's transmission, it's ownership, it's all totally regulated within the blockchain environment. So the technology works, and it's gone far ahead from even those days in 2017. Right now, I think so many different new type of technologies and innovations are coming through. In the regulated space that we're talking about now, Malaysia is taking the first steps of actually creating what we call security tokens under the new guidelines and rules. The guidelines allow us to issue any form of tokens, any form of securities, but if it's that sort of security, let's say we issue a token which is a bond, which we attach those are obligation bonds, then we have to comply with the bond regulations, okay? So it gives us tremendous flexibility as to how we want to structure whatever rights we want to attach to the same token itself. So that is one great flexibility that we have. And yet in a regulated environment, that keeps everybody honest.
So I think a keyword here is flexibility, okay? But before we go into like what kind of tokens can people issue, once that all these the licenses have been awarded and approved already. Before we go into what kind of tokens, I want to ask the question: when is it not a good idea to issue a token?
When is it not a good idea? Okay, George, good one.
Okay, well, considering that I did an ICO and it failed, right? So in 2017, I have first-hand experience. Let's put it that way. I consider it a failure. It's not because we didn't hit the fundraise, but it's because it's the after. It's in that 90% of failure. So I wouldn't say that I'm having first-hand experience and I wasn't the key person in that project. I would say that the worst time is when you have a poorly made plan. Like even today, as I do advisory to a lot, my experience has taught me to look at the fundamentals very well. You can have hype. Crypto is driven by hype. Hype, that's the hype train, right? And the problem with the hype train is that it brings in a lot of ignorant people. That benefits these guys. Whoever can build sufficient hype, they're going to make money, which is why in communities, we have people who ask on a daily basis, why pump, why dump, why pump, why dump? How do we explain something like that to you, correct? If you have no understanding of what you're investing in. So I think that fundamentals is really, really important. And if a company doesn't really have a strong use case, don't even bother right now. The difference between 2017 and today is the market's way more critical. We still need a lot of education, but it's definitely more educated than it was then. Like back then, people were a little bit more loose with their money. It was easy money. But now with institutions coming in, there's a lot more scrutiny. There's a lot more questions, right? And if you don't have a good, strong plan that really needs the blockchain, then don't do it. I think I'm not an advisor on more projects because 80% of the time I'm telling people that your project doesn't have a use case. It's a solution looking for a problem. That's the worst thing. You should be a problem, and if blockchain is the real solution, that's fine, right? And I totally support you to do it. So I think that it's a bit of self-assessment. If it's a cash grab, eventually it dies, and the investors are the ones who pays the price, because there are still a lot of ignorant investors out there, right? It's not their fault because they see it's exciting, they want to get involved. So I think it's an ethics issue, because from what I can understand, most of the people are aware, okay, that they are doing a cash grab. They are trying to just make a quick buck, and
It is an ethics issue.
it is that they know it. They can make all the excuses. They can come up with a public statement saying that this was not my fault, etc., and so forth. To me, every one of them at any point in the project development kind of knew that there was that risk at minimum, but they didn't care because it is a cash grab, right? And so to me, if we want this industry to grow, we have to stop that, right? And we should not empower these people. I have met many people who like people to do pump and dump projects because they don't care about the other guy. But what you're making it is worse for everybody else, because then there'll be too much regulation because they feel the need to protect investors a little bit more. So I think it's a message, because I do get a lot of requests. Can you help us to structure a tokenization? And I'm like very critical about it. So, and it's to question the fundamentals. So if your fundamentals are not there, it's not right, don't do it, because you're either bound to fail or you have a big ethics issue and you're going to make the problem worse for all of us. That's my take.
I really like that answer. So it's an ethics issue. Okay, it's an ethics issue. That would probably be also how I would evaluate, okay, to determine, okay, whether this is going to be a legit project or not legit project, right?
Mhm.
The moment that if I can sense that this is a cash grab, right? Okay, then this is not the correct reason to actually issue a digital token.
Mhm.
There is one article. I need to find the person, okay, who quoted this, okay, because I'm quoting this person who says that before you decide to issue a token, first of all, do you have a digital strategy? Okay, it needs to first,
Yeah.
you need to have a digital strategy, because these are going to exist. Okay, so if you
Mhm.
don't have a digital strategy, then that checklist, okay, just basically fails altogether, right?
Mhm.
And then the
Mhm.
second thing is that, is it actually giving value?
Mhm.
How is this token, okay, actually giving value? Because if you're
Mhm.
thinking about yourself, right, okay, then it will immediately fail the second criteria.
Mhm.
Anything you'd like to
I
add,
think
Rodney?
I think I like what you said about giving value in itself. I think we're quite mindful that the current rules in the guidelines itself actually emphasizes that you've got to be able to structure your token issue and your entire project from a value perspective. As George said, today the market's far more critical. Okay, today the market actually will evaluate whatever you put on your white paper as you put out there with greater level of, dare I say, cynicism because of past practices. And also, there is also a greater choice. There are more choices now than there were before during the craze. During the ICO craze, it was new. Many things were happening at the same time. They're all very, very new. Today, things have settled down. People know what choices they have, okay, to choose either to buy you or to buy another token issued by another issuer with a more reputable and a better track record in itself. So the market's far more discerning, okay, number one. Number two, the rules are now tighter. You can't simply do cash grabs anymore. As I explained just now, you actually have to give a product roadmap with milestones before, and you have to reach those milestones before you actually get any money. So the
Got it.
days of cash grabs are gone, okay? And that's why the rules are there for. Okay, and more than anything else, thirdly, the level of disclosure that's now required, okay, for any issuer coming onto the IPO market itself is now thoroughly actually disclosed. It's actually listed out. Every white paper must contain a full and frank disclosure of the technology, the buyers or the people behind it, undertakings, and also the stockholders have to sign moratoriums against their own shares. They can't simply sell out after they actually issue that. Right? So there are a lot of rules to safeguard investors. Okay, and really they are looking. Actually, what SC is doing is putting a whole range of measures to address many of the issues that George rightly pointed out that used to be devil. The old ICO market. So the IEO market really is ICO reform. Really, it's a reform ICO market itself using the same sort of technology, but in a far better and safer environment. That's how I would like to see it. Really.
Okay, so then the next question that I'd like to ask is that in the short term, once, okay, say fast forward, okay, 18 months when everything, okay, has been, is very clear already, right? Who has been awarded the license, etc. In the short term, who should consider issuing tokens? Can Malaysians issue digital tokens, okay, to fractionalize other things like real estate or investment funds, for example?
Well, the rules do not actually proscribe any body from issuing tokens for anything. Okay, the only thing that the rules actually ask for is that you've got to be able to put forward a digital value proposition. Okay, that is to say that the issue of the tokens must show some form of innovation, and even the business idea behind it must also do so. In other words, the issue has to come and demonstrate to the IEO operator to show that this is something that's new. It's a new idea. We're going to be able to advance things going forward. It's innovative, and such sort of innovations itself are what we're actually looking for. Now, the rules doesn't say that it's confined purely to the tech industry. Okay. All right. It doesn't say that. If there is a market for somebody to come up with an innovative idea to be able to fractionalize even real estate or come up with other ways to finance projects in itself that allows the sharing of, say, developmental profits with people who are token holders, and yet token holders also have a utility to use on the tokens. I mean, I'm getting ahead of myself here, but those sort of ideas can actually be built into the tokens. You see, the reason is, I mean, as a lawyer, I can tell you that a share in a company in itself has very defined rights that are actually recorded in the Companies Act 2016. Whereas a token in itself, you get to define what rights go into the token there. And the market's going to be very discerning. If you do not offer enough goodies attaching to the tokens, nobody's going to buy tokens. So you need to be very savvy, all right, coming out and to say, I'm going to actually give a lot of value to my investors. They are part of my journey going along as I build this particular company up. You need to think that way, and you need to be able to include them on board. All right. We've had the privilege of speaking to some people who love this idea and thinking of creating communities out of their token holders in itself to better fund and market their business activities themselves. I'm not at liberty to say which are these communities are, but you can imagine if there are people that actually support these kinds of businesses and continue to support, and they could be continuing investors. And the hope of them is either they stay on as investors holding tokens and getting benefits of it, or B, there's nothing in the rules that say token holders cannot be converted to shareholders in an IPO at a later stage. Okay, all right. So there are effectively giving them more options to exit rather than just the DAX markets, but they can hold and probably may even get an IPO on the conventional market.
Correct. If anything, the ability to reward existing token holders is much more easier because it's all on chain. Just like how all these airdrops, okay, basically are done retroactively and done seamlessly, and there's not a lot of paperwork that's required in order to identify, locate, coordinate, distribute, the rewards, etc. So I like the fact, okay, that I think the takeaway from this is that if anyone is considering, okay, to issue a token, the creativity is up to you, right? Okay, there's a Hong Kong real estate developer that manages, a portfolio of 75 billion Hong Kong dollars worth of real estate, and it has this initiative of buy a brick, okay, where it's a tokenized profit sharing system for its employees, okay, that when the real estate gets sold off, then they share the profit and stuff like that, which is like really, really cool. Just among some of the examples, okay, of what actually can be done, okay, and you can approach the IEO operators they can approach you and propose to you, right? That's basically what it is. They can propose to you what the token is for. And another thing actually that I think people don't realize, a lot of people immediately, associate, is that if I'm issuing tokens, I'm issuing tokenized shares of my company. But you don't have to do that. Is that right? You can
That is
issue
correct.
tokens
In
for
fact,
any reason.
you can issue the tokens, and the tokens do not actually dilute your shareholding. Now, if you think about it, what tokens do in itself is a securitization of the project or the asset itself. It's not a securitization of the shares of the company, right? So it is an asset class that is representative of some fractional interest in a project, not in the company. So one of the other big benefits of, I'm glad you raised this, our big benefits for issuers is that you don't get diluted down. You don't lose control of your company in itself, all right? You don't. You continue, okay, with the company, but you bear certain responsibilities, okay, to your token holders when they actually come on board. Of course, you have to look after the investment, look after the project in itself, and you're sharing the benefits of the project with your investors as the project progresses. All right, but you don't have to lose control of your company, and that itself is probably one of the big differences between people seeking, say, VC funding or doing an IPO where you sell a portion of your shares itself, and as opposed to tokenization.
I just want to add though, but on the flip side, taking the other view as well, right? I have come across many people whose only intention is to not dilute any shares. Now, it's a value, but at the same time, when you look at the tokenomics aspect, unless you have a very good tokenomics structure to create value for your token, right? I wouldn't discount tokenizing your equity as well, because sometimes people are, it depends on the nature of the founders, right? Some founders will be like, it's a cash grab again, It's like, oh, I don't have to dilute anything. I don't have to give up my business. I can just issue tokens and make a lot of money. That conversation I get a lot. So, of course, as an IEO operator, you filter those guys out to begin with. But if you are in an unregulated environment, you wouldn't know if that was their intent. And there are some projects in the NFT space where they never looked at their tokenization, tokenomics very well. There's one very big one. I don't want to name names. I'm not a fan, right? But they took money from investors and they designed the whole business to totally ignore the token that the investors invested in. So the price tanked, right? Because they did not take care of the tokenomics. It had no value. The token had no value. It's a huge project, right? It's making in millions, but the initial investors who backed the project, who put all the money, are left in the lurch. And they're massive and they're still making a lot of money. So the thing I want to stress is that it is a way for you to not have to dilute. I do agree, but you still have to consider the tokenomics aspect. And that's what IEO operators do, right? We'll look into that, look at the value of it, yeah? And take care of the value, for investors. Yeah, Rodney.
George, which is true. And to address that particular issue, one of the ways to deal with it is your disclosure, you see? All right. Yeah. For example, in your white paper, now it is required that you need to explain how your tokenomics works. Okay? The market will now be looking at it with a discerning eye, whether your tokenomics actually makes sense. If it doesn't, you're not going to get subscribers for your tokens. Okay, try as you might, and do not forget, at the end of the day, the company's promoter are also still have to bear all these promotion costs and matters like that. If they are happy to throw away promotion costs without making enough sufficient money for the IEO operation itself, then it's their funeral. So this proper disclosure allows the market to do a proper evaluation on that very point that you mentioned, George. Because I, like you, completely agree. Your tokenomics must make sense, okay? Which is part of your project sense. Does your project sense? Your project sense in there must include your tokenomics. Otherwise, what value is there to the token? Why should I buy? Right? So disclosure is going to be one of the ways to deal with this. And of course, I think the IEO platform operators will be asking very hard questions pertaining to this before they grant approvals for listings.
Right.
Okay.
I am enjoying this conversation very much. I think I've got a lot of takeaways. Okay. Before this conversation, I thought that IEO number one is only for the big guys. But I think it's very clear right now that IEO is also available for someone with, paid up capital of 50,000. They can raise up to 10,
The
right?
minimum paid up capital is 500,000 actually.
Or 500,000, right? So they
500,000.
can, so minimum paid up capital is 500,000. Okay, they can raise up to 20 times.
20
Right?
times, which is 10 million. So.
Okay. Okay. So now we have about 13 minutes left. Okay. I would like, okay, right. So yesterday we had the digital asset exchange, the local DEX. So just to clarify, some people yesterday asked me the question, hey Jason, why do you keep calling them DEX? DEX, they are not a decentralized exchange. No. DAX as in DAX, Digital Asset Exchange. It is the terminology that is used in Malaysia before decentralized exchanges got popular last year, like Swap and etc. Okay. All right. So that's what the local cryptocurrency exchanges are called. Local DAX. So yesterday, the local DAX, right? One of the things I got from them and I learned is that in terms of numbers, 50 to 60% of Singapore, for example, okay, is aware about cryptocurrency, about digital assets. They're aware. But the adoption is much a lower number, maybe like 3%. Okay, so and they kind of like estimate the same thing in Malaysia. 50 to 60% of the population are aware, but only 3% adopt, right? So because that's the road is so long, let's say for example, okay, that we're all green light, both Wetokenize and Fennel Capital gets its IEO license. What needs to happen first in terms of education and getting people on board?
Maybe I can take this one first.
Go ahead, Josh.
I have been involved in a lot of education privately. And one of the things I find that very interesting, right, is that because I have been doing like financial education across Malaysia, Singapore, Indonesia, so I have a bit of a wider view on this. And I find that there is this misconception that cryptocurrencies are for young people. Okay? But from a personal experience, and this is true because this is also a statistic that I think that is I want to address, right? The reason why is this misconception is because people think that the youth are risk takers. Therefore, they will go into cryptocurrency. That is the usual thing. But if you look at the actual data, right, Gen Z and the younger millennials are actually more conservative than the Gen X. This is a fact that most people don't understand. If you look at a lot of research done by many big institutions out there who are doing this kind of research, you will find that actually the younger millennials, the Gen Zs, their primary investments is fixed deposits. And I've seen this firsthand. Whereas people who are in their 50s or 60s are the one most interested in investing in cryptocurrencies. And that's the reason for that, because they also have the capital. They are willing to take a little bit of risk, but their understanding is way worse. So you have this very interesting scenario where the youth, who rightfully would have the capability of understanding technology, not investing. Factor, this is not made up, right? I didn't make these numbers up. On the other hand, you have a more mature market who are really interested but have a big difficulty of understanding technology, which is in blockchain. You know what I mean? That's a really big gap.
So there are two gaps. One gap, is the investor gap, right? Okay, so the young people do not know how to invest very well, but they can adopt technology faster. Then you have the older generation, which they know they got burned before a lot more times, right? Okay, so they understand how to allocate the money better, the risk better, but technology wise they find it difficult to adopt. So the merge, that is a very, very interesting approach.
Yeah. So for me,
I tend to take a slightly different view. Yeah. I tend to take a slightly different view on this. All right. I tend to take a slight, but the way we see it, and the way I see it essentially is that we're talking about an emerging asset class, okay? Digital assets, right? So the way I see it is that we need to actually educate and essentially hold the public's hand to understand that this is just nothing more than like another form of investments that you can make. It's the new asset class, the digital asset market. All right. And the one good thing about that, the new guidelines that we have, is that it's sort of, dare I say, it sort of has a lot of features of the traditional asset markets in itself. All right. It's because the traditional asset market, all the rules that were there were really designed to cut out all the problems that you highlighted, Josh, very, very nicely and very admirably, all the scams, all the cash grabs and all this stuff like that. I've seen in my early days of my investment banking, the good, bad, and ugly of a wild ride on the capital markets. Okay, in the 1990s when I was in Arab Malaysian and corporate finance at Southern Bank, where everything goes. We were the top. In fact, we are such a small population, yet our exchange was one of the top 20 exchanges in the world. Okay, we were so tiny, right? The party would never end. All sorts of market behaviors, which we now complain of in the crypto market during the ICO days. It was evident there. Give human nature a free rein to do anything they like to make money quick. It all comes up. All right. So in a way, we're talking about a whole new asset class. Coming back to it. So when you are having a regulated environment, all we need to do is to explain to them essentially what you're doing is something like a lot of many things which are new, okay, and they're equally safe. All right. Equally safe, but stored in a different medium and traded in a slightly different manner. And that's what we're hoping to get. And I believe that that asset class will grow. I mean, it's the same way like, George, if we look at some of the big Fortune 500 companies which dip their toes into buying crypto assets as part of their treasury portfolio, right? Okay. They buying that for the first time. Tesla buying Bitcoin was big news in itself. But it is the slow migration and say, that's a new asset class. We don't want to lose out on it. Okay.
Yeah.
So that I think is the problem that we have. Right? Okay.
Yeah. I do agree with you. I think that those are the things that I think with the IEO operator it definitely helps. And I think we do have a responsibility to educate, right? It's all parties. Like for me, education is both. One is the reduction of fear, right? And one is the reduction of the capital problem, because crypto is a very good way to go in with a very small amount of capital and have a big potential in despite your capital size, right? So that should encourage the smaller investors, the younger ones whose capital is not so big. So I think that so with this kind of like roadmap in place, I know that Malaysia is oftentimes seen as a little bit slow. Frankly, I complain about it, but regulations are never easy. But it does seem to have legs. But we all have to get involved. Like the worst thing to occur is that we have all the platforms, but people are just afraid to use it. I mean, it could happen, right? And then the issuers are not like daring to do issuance. You know, they still go the traditional route. And I think this is a real problem in Malaysia, because if you think about it, right, I have met so many business owners, even when they want to do a project, their tunnel vision tells them, I only want to do Malaysia. Very strange. When crypto especially allows us to have a more regional or a global view instantly. It's not a matter of how big you are. It's a matter of how good your concept is, how stable, how accountable, everything that IEO operator looks at. So I do think that companies themselves need to take some risks, right? If you have something of value, don't tunnel vision yourself into Malaysia, right? That's really, to me, a huge problem. Malaysians have so much quality, so much talent. We look at Bitcoin mining, we're listed as one of the top in the world. There's a reason for that. Our tech adoption is really high, but our ambitions are really low, right? And investors also need to embrace that, with projects that is being looked at by IEO operators. Do you have someone, even if your understanding is low, who is looking out for your interests, right? Who's screening all these things, making sure that at least it is worth a look in, and then embrace the new asset class, right? Instead of Until today, I still hear people say that crypto is a scam. I mean, guys, it's been 4 years since 2017. If you're still saying crypto is a scam, you obviously have been sleeping for the last 4 years, right? That's all I'm saying, right? It's insane that people are still saying it, even by some top guys. If you don't take it seriously, you are going to be left behind. That's a fact. And Malaysians, we got to stop being left behind, right? That's really that needs to change. Really needs to change.
Well, thank you very much. I'm afraid that we have run out of time actually. What's that? Really want to continue some more, okay? But the community, okay, has also some questions, okay? But I think that we need to you know maybe you can answer them, okay, in YouTube and in the Facebook, etc. Just want to quickly summarize, okay, for everyone, okay, some of the key takeaways today. So in Malaysia, okay, if you want to issue digital assets, the new rules is that you need to do it through an IEO operator. What is the status right now? Securities Commission, okay, has received a lot of applications, right? And they are reviewing, okay, who to award the license to the IEO operator. What that means, okay, in the short to medium term, I believe that in the next 12 to 18 months, we would have seen progress in this area, quite similarly to how the DAXs were awarded their license as well, okay, which is around like 12 to 18 months as well. And once that happens, we'll start to see more, okay, digital asset adoption in Malaysia. What are the benefits, okay, of IEOs? Okay, number one, it gives a new option for the investor. Why? Because liquidity. It allows them, okay, to have exit better and with more clearer milestones. What's the difference between regulated and unregulated environment? Okay, digital asset issuance is basically the vetting process that goes through true and regulated environment. So you don't have, okay, like crazy tokens or meme tokens, okay, like Shiba or whatnot. No, we won't expect, okay, these kind of tokens from, okay, a regulated environment. But it also just to close off, it also means that the goal is different. The goals, okay, in an unregulated environment, the pros is that you can have permissionless innovation, right? You have a lot of innovation, but you still have very, very high risks of scams and failure. Okay, the people who are in the crypto space, who are crypto native, know, okay, that they are self-sovereign and they are perfectly, okay, self-responsible, okay, if they want to degen. But in a regulated environment, the goal is to onboard traditional money, to transition, okay, to have more adoption. If we can successfully do this over the next 3 to 5 years, I believe that we are able to then capture a much larger, okay, portion, okay, of the digital asset economy, which, as you can see from the beginning, is growing really fast. And the only way we can do it is by continue to educate, continue to adopt. So I'd like to thank, okay, our two panelists today, Rodney, George. Okay, thank you so
Thank you
much
so
for
much.
being here. All right, tomorrow we'll be interviewing a blockchain startup, okay, that is founded by Malaysians as well. Torum, okay, one of the co-founders himself, okay, will be with us tomorrow. We'll be having a very exciting, okay, session with them. So another thing, okay, that don't forget, okay, if you have not claimed your POAP token, each person can only claim one, right, is to join the Discord channel by scanning the QR code here. What is this POAP token? This is a proof of attendance token. It lives on the blockchain. And one of the things, okay, that you can do is act as proof that you have attended, okay, these kinds of events. And in the future, okay, if there are any airdrops, okay, can be done retroactively because you have this on-chain with you. So go ahead and start this, okay, get your reputation up. Space. Another thing, okay, we want to shout out before this thing also gets sold out is that there is a virtual drone tech and blockchain bootcamp happening on the 20th of September. The first session, okay, seats has already been sold out. So scan the QR code right now, register for the 20th of September bootcamp. Okay, closing date is 6th of September, but I think it will be sold out before that. So act fast, okay, if want to take advantage of this. So again, we'll see you tomorrow. Okay, that just ends. Okay, day number 2. Okay, IEO to Spur digital asset adoption, and tomorrow we'll be back same time, 5 o'clock, with Torum. Have a good evening, everyone.